Welcome to another Coffee with Samso. Today, in this episode, we'll be talking about a business that's been flying underneath the radar of ASX investors for the last 6 months, and in some degree, it is still under the radar. It is a business that's going against the majority of Australian investors in the iron ore sector. The iron ore sector here in Australia is very, very centric on DSO Haematite, but this is all about Magnetite. Today, it is all about Cyclone Metals Limited. The ASX code is CLE. As I mentioned, their business is in Canada, and they are mining magnetite and upgrading it to greater than 62%, and in some degrees up to 71% iron content. Before we go forward, I will declare that I am a shareholder, and I have been a shareholder since the beginning of this journey, close to 6 months ago. CLE doesn't pay for this content. Samso now is an independent platform since the beginning of 2025. So we lean on your support for the commercialization of the business. To get context on the CLE business, it would be a good idea to have a look at the blogs we wrote in 2019 on Champion Iron, which has a back-to-back similar business model, and a blog we released a week and a half ago before publishing this Coffee with Samso on Cyclone Metals, as well as the general magnetite business in Western Australia that seems to be perking its head up, led by the iron ore giants of Andrew Forrest and Gina Reinhardt. In summary, as I mentioned, Cyclone is all about magnetite. It's all about upgrading this ore. It is a business that is not commonly understood in Australia, but globally it is a business that's been going on for decades. It is all about the green iron and the green energy phenomenon that's been capturing globally in the last decade. So today we have Paul Berend, the CEO and Executive Director of Cyclone Metals, sharing with us his thoughts and what the business is all about, and how this could be something that could move a small minnow ASX 15 million market cap company to something that's akin to Champion Iron, which has a market cap over 3 billion. Paul has over 20 years experience in the iron ore sector. He has been in the business development for Rio Tinto, Director Hatch, and also Cyclone Metals, which is the world's largest steel producer. So grab your favorite beverage, sit back and relax, and let's listen to Paul Berend to tell us about the Cyclone Metals story. Welcome to another Coffee with Samso. Today we are back at Samso Central at the UWA Club. It's on the campus of University of Western Australia in Crawley. And as I've mentioned in the intro, please welcome Paul Berend. I pronounced it correctly?
You got it right.
CEO and Executive Director of Cyclone Metals. This is a non-sponsored Coffee with Samso, so no need to send those comments when you've watched it. So, Paul, welcome to Coffee with Samso. Look, give us a bio of yourself and how you came to be involved with Cyclone Metals.
Well, thank you for having me. So, my background is steelmaking, and my heart is molten iron. So, I am the former head of strategy for Arcelor before it became ArcelorMittal. So that goes back to the early 2000s. And when Mittal took over Arcelor, I came to Australia. I got a job with Rio Tinto as head of their business development for iron ore. That got me into the mining business. Following that, I discovered that Perth was the Silicon Valley for mining, lots of entrepreneurs, venture capital, very, very exciting I was a European at the time. And so I got into the junior space, worked with private equity, did a number of projects. So that's my background. Cyclone came along. I was working with some of the venture capitalists and brokers here in Perth. We were looking for exciting projects in the iron ore space. We found this project in Canada in April 2023, I believe it was. And so we bought this project, and then we essentially backdoored it into Cyclone.
Look, the Cyclone Metals story, I mean, I've mentioned it in the introduction. I've had a lot of conversation with people, and then we kind of spoke about this off camera as well. That every time I talk to somebody, they still say, "Look, I'll take hematite any day." I mean, we know the hematite industry works, but it works in a different way. So why are people not on that bandwagon, especially in this area? I mean, you would have talked to a lot of people. I- Is that changing, or is that still people on one side?
Well, I think it is changing. There's a big shift in the iron ore industry from hematites to magnetites. But I think to understand it, it's important to understand the fundamentals of steelmaking and why you would use one of these minerals over the other. Keeping in mind that the seaborne market is overwhelmingly hematite, over 90% currently today. Now, if you compare a hematite and a magnetite, these are two bulk commodities, and it's important to remember that it's fundamentally an infrastructure play, so you need to have a route to market. But if you have that, the differences are fundamentally that a hematite is cheaper to produce, it's higher grade in the ground, so you essentially can dig it out and essentially ship it to a blast furnace, and it can go straight into a sintering plant and a blast furnace. Whereas a magnetite is lower grade, so it requires grinding and some additional processing, but conversely, you get a much higher quality product, which has a premium.
It's lower grade because of the ore, not the
Yes,
actual mineral, right?
it's the nature of the ore. Magnetite ores are typically around 30% Fe in the ground, and a hematite ore typically has 60 to 65% in the best cases in Carajás, but typically 60 to 62%. And when people refer to the iron ore benchmarks, it's typically the 62% Fe hematite ores. But iron ore is quite a complicated mineral, and depending on your impurities, the grade, you can get premiums or discounts. And that's captured in a concept called value in use, and that really is the value of an ore in a blast furnace in terms of when you smelt it. Now, let's get back to that point. So hematites typically have a higher grade in the ground, but once you process the magnetite, you have a higher Fe grade and you have much lower impurities. So they get a premium for that. So that's number one. The other factor that people don't realize is that magnetites require a lot less energy to be smelted, in other words, a lot less coal, because when you process a magnetite, there's an exothermic reaction. It gives off heat when it converts into iron, or steel, whereas a hematite does not. So if you're a steel maker and you look at it, you say, well, my magnetite is intrinsically more valuable. It's a better product in my blast furnace, but the hematite is cheaper to mine and to buy. So that's typically been the trade-off. Now, over the last decade, that trade-off has shifted in favor of the magnetites. And there's two reasons for that. One is the large hematite deposits in the world, be it in Brazil or in Australia, the quality of these deposits is degrading rapidly because we're essentially running out of the really high grade hematites, right? And so as a result, the steel mills need more magnetite to blend out the contaminants. And a lot of people don't realize that China produces about 300 million tons per annum of magnetite ores. They import about 900 million tons of mostly hematite ores, but they blend these. And so currently they have to put more and more magnetite to essentially reduce the contaminants that they have in the hematites. That's one part of the equation. The other part, which is probably overemphasized, is the fact that it's the carbon footprint of a magnetite is obviously lower than that of a magnetite. You use less coal. And in markets like Japan, Korea, Europe, and the US, steel mills are trying to reduce their carbon footprint, and the easiest way to do that without investing billions of dollars is to just put more magnetite in your blend or go for a pure magnetite blend. So there's been this shift, and that's why you're seeing all these magnetite projects coming up online, be it in Australia with FMG, Iron Bridge. You've also got the Razorback. There's a whole bunch of projects in Australia, and of course in Canada with Champion Iron and now Iron Bear. All of these projects are riding that wave of a fundamental economic shift. The other thing worth mentioning that the Brazilians are running out of high-grade ores at a very rapid pace. That explains to some degree the interest in Vale and Iron Bear. And of course, they need magnetites to upgrade their hematites. That's one part of it. The part which is very important but maybe overemphasized is the importance of direct reduction. And allow me to say a few words about that. So direct reduction is making steel with natural gas instead of coal, in essence, right? So if you've got natural gas in the Middle East or in Russia or places like that, then you can actually use that natural gas to make steel in what's called a direct reduction unit. This typically has half the carbon footprint of blast furnace steelmaking. And keep in mind that steelmaking is 8% of the world carbon emissions. It's huge. Right? It's just behind energy. Again, most people don't know this. So you can halve that simply by going toward, if you could switch all your blast furnaces to DR, which is impossible, you would halve that. It would make a huge difference. But if you're in the Middle East and you export steel to, say, Europe, where there's all these carbon taxes, this thing called the CBAM, which is being rolled out, then your DR-based steelmaking has a huge advantage. Now, here's the catch. The only way to make DR steel, which is called HBI essentially, but I'll park that, is actually to use DR pellets. Direct reduction pellets are extremely difficult to make. There's only 3 producers in the world, and they command a huge premium, huge premium. So typically, if iron ore sells for, say, $100 a ton, the benchmark, DR pellets will be anywhere between $230 and $250 a ton, and the additional conversion costs are about 15. So there's a huge potential, 15 roughly. So, if you're producing, say, iron ore FOB for, say, $30 a ton, which is roughly what people do in the Pilbara, you add another 15, you're at 45, you've got your DR, you've got a pellet. Now, that makes this market incredibly attractive, and everyone talks about it, but there are very few people who can actually make these pellets. Iron Bear is one, so we'll park that, but that's a key driver of this project. But what I will say about it, though, if you look at it strategically, the DR pellet market is maybe 130 million tons per annum. The seaborne DR pellet market, the iron ore market is more like 1.6 billion tons, right, of which 900 million tons go to China. So it's still very small, but it's growing rapidly and it's very high value. And that is driven by, green steel and, low in carbon emissions. So that's an important play at the level of Iron Bear, but the strategic picture is simply hematites are becoming of much lesser quality. Magnetites are the solution to essentially upgrade your blends and get the optimum outcome in your blast furnace.
So going back to your direct reduction pellets, is that dependent on your source material? Can a hematite person do that?
So you can make direct reduction pellets with hematite. It's more expensive. Vale does this quite successfully, but ideally you want to use a magnetite because magnetites are cleaner, so it's easier. You need an exception. There's only really 2 places in the world where hematites are clean enough to be able to do a direct reduction pellet. But magnetite-based direct reduction pellets have a much lower carbon footprint and generally much easier. So if you look at that DR market, which is, will probably double between now and 2035, so growing very rapidly, although it's still small. The three players who dominate that market are Vale with about 60%, Samarco, which is a JV between Vale and BHP, and the third one is IOC, which is Rio Tinto. IOC being in Canada, next to where we are, and the two other companies essentially use Brazilian ores. And that's pretty much it. Now, the reason why there's so few people who can do it is because it's primarily a function of the mineral and your ability to reduce silica, and you have to have literally no trace elements. So no vanadium, no sulfur, no chrome, no manganese. Manganese is a huge issue, no phosphorus, literally nothing. And you have to be able to get your silica levels and your concentrate down to 1%, 1.1, 1.2% max. Now, let me tell you how low that is. If you look at Iron Bridge, they're at 5.5% silica for their concentrate. A good Carajás-based 65% Fe hematite is at 3.4%, something like that. So it's incredibly difficult to get these silica levels down. It requires advanced processing. But the most important thing is it's a function of the ore body. It's completely a function of the ore body. And the grade of Fe doesn't matter. The grade of Fe will not tell you whether or not you can get your silica levels and all these other contaminants out of the concentrate or your product that you're selling.
I'm assuming that that effectively means that for you to be a significant DR player, you need a source that's low impurities, full stop. Would that be a fair comment?
You need a source where you can reduce the impurities. It's a little bit more subtle.
Okay.
Remember that the magnetite has only 30% Fe grade in the ground,
Yep.
right? And so if there's any magic or any skill that we had mostly luck, right, with Iron Bale, let's be honest. But if we had any skill, it was the fact that when we looked at the resource, we looked at the mineral, we looked at the mineralogy, our experts thought, you know what, I think I can get that to a 71% Fe grade product with less, with 1% silica by doing these 5 things. So the mineralogy is what tells you what it is. Now there are some contaminants like manganese, for example, which are quite difficult to remove. So if you have those in the resource, you're pretty much stuffed. But generally speaking, it's more the mineralogy. It's a bit more subtle than that. You have to look at the very detailed, what the grains look like, what kind of mineral it is. And usually all these ore bodies have, 15 different minerals, which might be sort of in there at various grades. So there's a bit of science there, if that makes sense.
I mean, you got 16.6 billion tons at
Yep.
just under 30%, 29.3, according to your info. How much of that? Well, I guess the question would be, how much of that would you be able to transition to, reserve levels?
Well, the answer is I don't know. What I can tell you is that all of it is amenable to making DR grade concentrate, which sells at a premium, and then DR pellets.
All right. So you got that pedigree.
So we've got the pedigree of the product. What we don't know is how much of that will go to reserves. Now we've got a big drilling program coming up this year, 24,000 meters, and one of the objectives of that drilling program is to work out where the pit will go. And once we know where the pit is going to be located, and there are a number of considerations, some of them environmental, others linked to the shape of the ore body, then we'll be able to say how much of that is going to go to reserve status. Look, it's a very blobby ore body. It's a big blob. It's got a very low stripping ratio, which for people who aren't, geologists or miners, is a ratio between the waste and the ore. So we have relatively low waste versus ore ratio, which is good for mining costs. But fundamentally, I don't know.
I think we may have touched this, and you may have answered. My question was that: are there any metallurgical issues for you to do your business? I think what I was trying to get at with that question was, are you able to outline what is the the good, the bad, and the ugly, and the potential hurdles that you
So
met?
when we did our metallurgical test work, and most of our focus has been on that. That's where all the magic is, right?
On the DR.
Yeah, we
Yep.
had everybody knew this was a big resource, right?
Yep.
Everybody knew that it was next to rail. This project was called Block 103 historically, and we bought it, and we can maybe go through the history because it's quite interesting. But Block 103 is a name given by Rio Tinto. So Rio Tinto knew about this deposit, um, and what they didn't achieve was, to make a DR grade concentrate. Maybe it wasn't strategic at the time, so we're going back into the 80s. But the point is, this thing has been known forever. And so it was all about the metallurgy. And so what we did is we demonstrated that we could get this DR grade concentrate with high mass yield, right? Because it has these huge premiums I talked about. Now, we did that by essentially creating blends across the whole of the 16 billion tons. So we created essentially, we made a worst case scenario type processing. So we did, very low grade runs in our pilot plants, medium grade runs. We never did any high grade runs because we didn't think that was necessary. And so we demonstrate conclusively that we can get to DR grade pretty much with all of this. So when we look at, what's going to go to reserve, what will fall out will be because of the geometry of the deposit, not because of the metallurgy. If anything, there's upside because we believe that we might be able to recover some byproducts. But that's just going to improve the economics, which are already outstanding.
So would the DR be the main focus of the business? I mean, you're just making that, or you're also looking at other parts of supplying magnetite?
Well, that's something to look at with our partner, Vale, right? So for Vale, their interest is a DR grade quality. They're building pellet plants. They have a 9 million ton per annum pellet plant in Oman. They need material for this pellet plant. So we have an internal client. But the size of the resource opens up a vast number of options, including producing cheap blast furnace concentrate, if that's what people want. Bear in mind that the DR market's quite small, and it's growing, but it's still quite small. And so you might not want to saturate that market with a huge deposit just pumping out DR pellets and DR concentrate.
Would that be Vale's, I mean, jumping the gun on my question is, but would that be Vale's main focus of partnering with you guys? Because obviously that's a very important part of the business.
Absolutely. And that's really the main reason. So one of the challenges with magnetite deposits we haven't talked about is the capex. Because you have all this processing, you need to build plants, you need to build a concentrator. So magnetite projects are very capital intensive. And when you're a small junior with a market cap of 10 or $50 million, the markets don't believe you can raise this huge capex. And so we needed a partner which had a balance sheet that could support the project. And so the question for us is, well, what do we need to demonstrate? How do we need to de-risk the asset to bring a partner in like Vale? And others looked at this deposit as well. And fundamentally, it was demonstrating that we could be a supply of vast amounts of very high-grade magnetite concentrate all the way up to DR, right? Because that's unique. And
It's unique for any project that I know.
it is. Even Championan can't do it. I mean, they're trying to do it, and maybe they'll be successful, but as far as I know, they haven't been able to generate any DR concentrate or DR pellets, and they've been talking about this for years. Their product's excellent, don't get me wrong, it's a great project, but that sort of extra sort of super premium, they're not quite there yet. Vale needs that. And, Vale has their northern system and their southern system, so without going into any detail, but they've got some high-grade material and some low-grade material. Just the fact that you can blend it removes all the discounts on their lower-grade material, so having a large source of high-grade material to blend, plus the DR angle, which is huge and real, is absolutely strategic. So we focused on the metallurgy because there was no doubt that the resource is there. It's been known for years, for decades. There's no doubt that, there's a heavy haul rail which is there. There's no doubt there are deep sea ports. Everyone knows this. This is a functioning iron ore export hub. The real question was, can you actually get those super premiums? And if you can, then this project becomes, very attractive.
When you had this process of talking to people, and I'm sure you would have talked to all the majors, were there other people who had their hand up, or were you just lucky that you've got Vale?
I like to think that we had skill, but maybe luck played a big part in this. Look, I can't really talk to, who was looking at us and what the circumstances were. There were NDAs. We got vastly different reactions from various majors, including trading houses and other players in the industry. I come from the steel industry, and I'll be really honest with you, Sam. So I was looking to do a deal with a steel mill. I was a bit sick of mining companies. Vale changed my mind because they've been absolutely wonderful to work with. They're very humble. They're very technical. I think their ethics are excellent, which is something very important in this industry for sustainability. And they've treated us very well. But my dream was to do a deal with a steel mill. Because that's my DNA. And I said, look, let's cut all the crap about stripping ratios and grades in the ground. You know the value of this product. You know what it is. Give us hundreds of millions of dollars and let's build an integrated value chain, a bit like the Russians do with their GOX. And the steel mills were just too slow, and I'm deeply frustrated about that. It looks like there's more of an entrepreneurial drive in the mining side of the industry.
I think that's the lifeline of the mining industry, is that taking that extra bit of risk,
Yeah.
because steel mills making cash hand over fist, right?
Yeah, and they struggle to deal with uncertainty. And when you deal with geology, you deal with exploration. We're very similar to tech companies. We have very binary risk. You find something or you don't. You're successful with your approvals or you don't. And that's something I think steel mills struggle with.
That 10 million that just came through, I mean, how important was that from an investor point of view? And I was looking from afar, I guess, well, that was, at least they've stumped up with the money, or part of the
Well,
money.
it would have been disappointing if they hadn't. So look, they've committed to phase one, which is actually $18 million US, and that's about just below 30 million Aussie. And we have a work program agreed to do that. And so they're paying that in installments over the next year or so. And that's been agreed. And the first installment was $10 million Aussie, which is $6.3 million US. So look, of course it's important for us. We can't raise that kind of cash on capital markets. We've been very fortunate to get quite a lot of money from the Perth venture capital broker community, which supports high risk, high return mining projects, and the space you're very familiar with. But this is out of their league. So we have to bring these two worlds together. So what this enables us to do is, a 24,000 meter drilling program. It enables us to do a PFS. We've already got a scoping study there. It's just, but it's kind of what I would say the vanilla normal development of any, iron ore project. There's nothing particular about that. It's what you would expect. It's just a lot of money because it's a big deposit. That means a lot of drilling. And of course, we have to put a lot of effort into making it socially acceptable. And what I'm talking about is earning a mandate to operate from the local communities who have not been treated well historically by mining companies. So we need to build those relationships, and so that takes time. And that's probably the more difficult and more strategic part of the project, as opposed to, okay, well, we know how to process this stuff, we know how to mine it. So all of that, I'm going to say, is pretty straightforward, right? Yes, we can talk about power, we can talk about rail access, all those things, but those are the types of issues you have in any type of project of this nature, and stuff that, Vale is acutely aware of, and we're just going to work through that.
And obviously you touched on the conversation with the First Nation groups and things like that.
Correct, yeah.
How's that going? I mean, how do you feel?
Look, I feel a lot of empathy for these groups, and there's a lot of history in the city of Shefferville. It was built in the 50s and 60s by Rio Tinto. In the mid-90s, they attempted to partly bulldozer the city. It was blocked by the First Nations, who created a human ring around the stadium there, but they bulldozed the hospital. How that happened, it just blows my mind. But when Rio decided to retreat from that town, they had a sort of what I would call a scorched earth type policy, and that's at least how it's perceived by the First Nations. So that's not great history. So you've got various groups. So the two groups which live in that area are the Makimitush Inus, who are literally in Shefferville. So half of the town is actually their reserve. And then you have the Maskapi, who live in a town 15 k's away called Kawawashikamak. And both of these groups have quite different histories. So we've engaged with them. There's other groups like Item down south, and we're trying to sort of build relationships. It's early days, but our approach to this is to earn the mandate to operate, regardless of the regulations that are in place. This is a long life asset. It's going to profoundly change the way people live in that region. These groups have an incredibly rich and interesting culture. It's part of the what the French call patrimoine de l'humanité. I don't even know the word in English, but patrimony of humanity. And they're also not very numerous groups, which means that their culture is fragile and needs to be protected. So we're trying to work out and engage, how you can blend, modern day large scale mining and processing with maintaining the lifestyle and culture of these communities. A lot of them are familiar with mining, interestingly enough. The Maskapi have mining policies which are very sophisticated, but it's going to be a journey. And so, and it extends also to the French-speaking communities in Shefferville, who are there as well. But this is 80% First Nations.
Okay. Is it keeping you awake at night?
It's yeah, it is. I have to be honest about that. It is by far the most important and challenging dimension of any of these projects. It's the human dimension of it. I've seen mining operations in Africa, in PNG, and all sorts of parts of the world. I've seen some of the worst and best practices that you can think of. And I take it very personally, and my team, we've worked extensively in New Zealand, where the issues are very different, but there are some commonalities. We need to get this right. We need to do something different, and I think we are ready with Vale to invest heavily to make this work, but we have to do things early and being completely transparent, giving full information to the First Nations. There's an element of mutual education that needs to happen, and we need to take the time to do it. We've tried to engage all the way back, last quarter last year. This is a very young project, and we need to try and listen and understand to the concerns. There's a lot of legacy. There's lots of projects which have failed there, so there's been quite a lot of disappointment. And we need to demonstrate how we're different and to build those relationships.
Well, I mean, it's good to know that from all parties involved, all stakeholders, that there is a want to make this work mutually. When I look at the whole business, obviously, you look at it technically and everything, and it's kind of a fairly advanced project as such, but early stage, if that makes any sense.
No, it
But
does.
when I look at
Yeah.
Vale's involvement and the time that Vale would have taken and the commitment that they've signed up for, and then they signed that commitment, it makes me have a bit of comfort in thinking that, well, these guys would have looked through it and talked about the issues we just discussed and saw a future for it. So that's the comfort that a lot of projects don't get.
That's a good point.
Yeah.
It's a good point. Look, Vale, I can reveal this. They started looking at this project in April last year. They had half a dozen trips, both to Shefferville, where they literally walked the tenements and checked every single drill hole. I mean, you have to imagine that. And every single core tray was looked at. Um, but beyond that, Vale has operations in Canada. They bought Inco. I can't remember if it's 2009. They've got the Sudbury complex. They have over 6,000 employees, and they've already got IBAs with First Nations. So IBAs are impact benefit agreements, which is sort of a formal agreement to cooperate with economic terms, employment, etc., and firm commitments. So Vale has been very successful actually building good relationships with First Nations. They're different groups, different locations. So they're familiar with it. Having said that, and technically, again, they've looked at this extensively, and so that should give comfort to people like yourself and others who are supporting the project. Having said that, no one underestimates the challenges to bring something of this scale online, and we should be humble and take it step by step. But we can be cautiously optimistic that at least for now, we don't really see any big red flags, but there is a huge amount of work. Technically, I think it's pretty straightforward. Let's be clear. We know the economics of this. We know the premiums for the product. We know how to process and mine the ore. If you wanted to point to one technical challenge that we're very keen to resolve, and we will resolve, we want to go with dry tailings. So we want to be the first large-scale iron ore mine not to have any wet tailings, but nevertheless do wet processing. We think we can pull this off. There's been a lot of research in that space. Vale's done a lot of research. So we think we can do it. That will be a premiere, and that will make this far more sustainable than anything else out there. And we're happy to sacrifice a bit of profitability because this is going to require energy for the sake of sustainability, because it's such a long life asset, which hopefully should have phenomenal economics, which means that we can afford and we should do these things. There has to be a balance, right, in these things. But all the rest of it is, I think, pretty straightforward. And then it brings you to the approvals, environmental, the impact on, the caribou, the impact on the social structures, which you have in and around Shefferville. And it brings you to what I'm going to call earning a mandate to operate. And something like this should be, and I'm using this very carefully, it should be owned, but maybe not in the sense of equity, because that comes from investors, but it should be owned by the people who live there. Communities get built around these types of operations, so you need to build these communities right so they function in a healthy way. And
yeah, I think every time when something, the great people always said that if both parties walked away thinking they should have got more, that's the best deal, right?
Possibly, yeah. But again, the first part of it is understanding what the lay of the land is. A lot of history up in Sheffield. It's a mining town, right? But it's a mining down on the decline. There's only one small mining operation left there, which is Tata Steel's DSO. So it's got a DNA of a mining town. So that's a positive. It's obviously super isolated. I mean, this is the Great North, but it's also a very exciting place. It's adventurous. It's wild. They've got bears all over the place. It's amazing. It's a beautiful
funny.
place.
Yeah, you go to Canada, you got to watch out for bears. You come to Australia, you got to watch out for little spiders.
I know, and I'm not worried about spiders and things. You can step on them, but the bears, this is a different thing altogether.
In preparation for this conversation, I put out on Twitter for people to come in with some questions of their own. One of them is, will the tariffs affect, the Trump tariffs, as I'm assuming, a concern for CLE and Vale's deal and the project?
Look, I don't think so. And the main reason is, I'm going to put two reasons out there. One is timing, right? If you think about the Trump tariffs and our timelines to get into production, We're hoping to get to decision to mine in, say, 3 to 4 years. Then you'd have at least 2 to 3 years to ramp it up, so 7 years. So, we're talking 2031, 2032. I think any tariff issues will have been resolved by then. The second thing is, and this is kind of exciting, and I do want to emphasize this, is if you've got a cheap source of high-grade DR pellets, right, which we would be. Bear in mind, we have hydropower available, right? For sure, we have to build power lines, but it shifts the economics of your magnetites hugely because it reduces your grinding costs a lot. We talked about that. So that emphasizes the economics. So you've got this great, super high-grade iron ore available in your backyard. They've got natural gas both in Canada and the US. So if you're looking to reindustrialize your country, if you're looking to get an industrial hub going, ask yourself why people made cars around the Great Lakes. It's because they had iron ore and coal. Same thing for the Ruhr Valley in Germany. So if you have a bit of vision here, this resource, because of its scale, and I'm going to be blunt, we're way bigger than Champion Iron, right? Champion Iron doesn't move the needle for a valley. Iron Bear does.
Which is very important, which is a point that keeps clicking in my head when I'm thinking,
right,
where's the value? Vale wouldn't do this if there's no value.
Well, it has to move the needle for them, right?
Yeah.
They're a big company. They produce their 320 or 340 million tons of iron ore per annum. So adding another 5 or 10 means nothing to them, right? So I don't know what we'll land on, and this will be a staged development, obviously. But the point is, this thing is truly massive and strategic. So you could leverage this to build an integrated industrial hub, which necessarily would involve the United States. So I don't believe, strategically speaking, that either Canada or the United States have any interest on putting tariffs on this. Quite the contrary, they should integrate, they should build DR units, because it would give them a strategic and structural advantage versus the Chinese. Consider this. When the Chinese manufacture a ton of steel, they import 3 tons of raw materials, mostly from Australia, be it the coal or the iron ore. Some of it, obviously, from Brazil. That's a lot of carbon, a lot of dollars, right? If you can do it in the US integrated, where it's literally 1 ton per 1 ton, you could put a DR plant, very close to the mine, close to the iron ore, or close to the natural gas. We can work through this, but you just would have devastating advantage in your steel production. You have steel, you can make cars, tractors, washing machines, you name it. So there is a play here, and I think that Trump's plan to reindustrialize, this is a type of thing that gives the Americas, North America, a structural advantage. So I don't think we'll be hit by tariffs. I think we'll benefit from this. And if we did get hit by tariffs, all this stuff would just go to China. That makes no sense.
I mean, I'm the whole concept. If anyone had any doubts as well, why would Vale waste their time doing this? Is the kind of very sort of layperson kind of thinking, right? Not very technical, not very,
Right. It's called common sense, right? I mean, clearly they've done their due diligence. They liked it. Yeah, makes sense.
The other question I think we may have already touched, which is how much is the resource expected to build up to after drilling concludes?
Well, we have an exploration target. I can't remember if it's something like 30 billion tons, just based on magnetics. Look, I don't know how big you want this to be.
Yeah, no, that's one of the questions.
But let's put it like it's very strategic. Now, there are other magnetite deposits out there in Canada. Some of them are very large. I'm going to put this bluntly out there. Apart from IOC, nobody can produce the same quality that we can or get the type of premiums that we can. So that has a massive impact on your ability to sink in the capex because you can justify it. So we're going to spend a lot of time, refining the resource. But yeah, how big is I don't know. I mean, yes,
Enough
we do know, but you can throw big numbers around, and I just don't want to mislead people into thinking that all of that's going to hit the market. I think the point here is there'll be bottlenecks, whether it's the rail or the port, and so At some point, we're going to saturate the rail, so you'd have to double the rail. There's a big step in capex. Those are the things which is going to drive the production. But bear in mind, it's been done in Australia when FMG and BHP doubled the rail. We've seen it before. In this particular case, we can start on the existing rail. There's quite a lot of capacity there, and we'll be issuing studies and numbers on this over the next couple of weeks. But yeah, this is a world-class potential development, and it will have all the challenges associated with something of that scale.
I'm sure that's going to be the case. And final one, I guess, limited by time, obviously. What costs will the hydroelectric power cost us per kilowatt when we are in production, knowing the likes of FMG are paying 23 cents per kilowatt in Australia as an example?
So I can't really put a number because that's something to be negotiated. All I can say is it will be a lot lower. You can divide that number by anything between 2 to 5. And it will have a massive impact on the cost of production. Because what will happen is there'll be some additional expansions for the power network. There's a small hydro plant already next to where we're at. The expansion capacity there is quite limited. I could expand on that. There's a much larger hydro facility called Church Falls that we can tap into. It's a bit complicated because it's in Newfoundland, Labrador, but the distribution and operations is by Quebec Hydro. So there's negotiations going on between those two parties, successful negotiations. They've agreed to some massive expansions of this hydro capacity. So we'll tap into that. We don't know exactly the rates, but let me put it like this. Power is going to be one of our big advantage in terms of our cost base compared to FMG and pretty much anyone else. And it's all renewable, so the carbon footprint is going to be phenomenal.
One of the things that I spoke of thinking of, and I guess is one of the narratives with the green iron concept, is how much of this would add to the greenness of your story?
So this always annoys me. People, be it particularly the majors, they always talk about their own carbon emissions and they ignore the value chain of steelmaking. 90%, 95%, I don't know the exact number, of carbon which is created by steelmaking is when you smelt it, right? And so that's essentially in the blast furnace or the DR unit. Everything else doesn't really matter. Magnetite reduce the carbon footprint of steelmaking. They make a material difference. It depends on the blends, but it's very material. So if you're thinking green steel, if you're thinking, objectively about how do I reduce carbon emissions and pollution, the first thing you should say, well, how can I reduce quickly and efficiently the CO2 emissions of existing steelmaking facilities? Use magnetite. It's pretty straightforward, right? It's clean, less energy, your CO2 emissions are going to go down. Then if you go to the next stage, you say, well, okay, I'm expanding. How can I actually make a big difference? Then go the DR route, right? And then, use natural gas instead of coal. We've got plenty of natural gas in the world. Make steel with it, okay? Then you obviously need DR pellets, but thankfully you've got Iron Bear sitting there with a vast resource that can help you out. And then the next stage is to say, well, I don't want to use natural gas. I want to use hydrogen. And that's what people call green steel because there's no CO2 at all then, right? Or virtually nothing. But you need to create hydrogen in vast amounts, and that's extremely expensive and difficult. It's doable. So that's a logical, pathway to sort of green steel. But you get most of the benefit simply by improving the efficiency and the carbon footprint of your blast furnaces, because realistically, no one's going to shut them down. Does that make sense? Sorry, I'm passionate about it because there's so much disinformation.
I think that's a good way
to
explain, because a lot of people just throw those narratives around, but when you talk about where you're saving it from, saving it mining, what you're saying is not.
It's irrelevant. It means nothing, and it's actually dangerous. People go on about electric dump trucks and stuff. No, clean up your iron ore. Do something which matters for the environment, not getting brownie points or virtue signaling.
Yeah, good point. Good question too, I must say. Give
Sorry.
myself the credit. Iron ore price. I mean, I've read narratives that in the short term we might see $80, and then it will come back to 100. This morning I saw AFR says, we're going 103 or something like that.
Yeah.
What's your thoughts?
Okay, over the last 5 years, the iron ore price has averaged around $120 a ton, and it varies quite a bit. If you look back historically, analysts have always been bearish on iron ore. It's quite funny, actually. The long-term price assumptions of the Morgan Stacks, RBC, have always been 60, 70 bucks per ton. So there's always this belief that there's a massive amount of iron ore which is going to swamp the market. It's completely wrong. I think iron ore prices are going to stay above $100 a ton. They might blip when Simandou comes online. And let me explain why. We talked about the hematite deposits running out, so there's a quality issue which is becoming structural. But there's also what I call the snowball effect of China. So bear with me for a second, right? So China imports about 900 million tons per annum of iron ore per annum. Let's round it up to 1 billion. Let's just take China alone. Okay, let's ignore the rest of the world. Let's ignore India and all those other places which are exploding in terms of their imports of iron ore. So if generally when you look at steelmaking, and to simplify, we're going to consider iron ore and steelmaking to be just linked, proportional. The general rule is that a developing economy increases its steel production by GDP plus 1 or 2, and it's GDP minus 1 for a developed economy, say, Japan, Europe, the US, Korea, those types of places. Now, if you imagine, let's take the 1 billion tons of iron ore that China imports. Now, imagine that the Chinese economy's growth, say, at 4% per annum, right? Make it 3, make it 4, make it 5. So that gives you 3% GDP minus 1 for the growth of the iron ore that China does mechanically without any big infrastructure projects. That's 30 million tons per annum, okay? Which means that Simandou gets swallowed up in 2 years. Where do you see every year a 30 million ton per annum new iron ore development in the world today? Do you see my point? So I think there's a lot of smoking the carpet. There is a belief that all the scrap is going to change the iron ore dynamics, and it will. If you look at developed economies, when you have a large amount of scrap takes about 20 years to come back in the market, give or take. So, so if you look back at the Chinese economy 20 years back, so you've got this source of scrap hitting the market, and the Chinese are building EAFs, electric arc furnaces. So all of that's true, but all of that is captured in this rule of thumb that I just gave you of GDP minus 1. When I was head of strategy at Arcelor, we looked at these things extensively. It kind of works, and there's very few exceptions to that sort of rule, if any. So I'm optimistic on iron ore. I see the world, generally all industrial commodities are going to be in short supply because we have a finite supply of these things. And, when the Chinese want to drink coffee, the Brazilians, they want their washing machines, the Indians, there is no way that we're heading for an oversupply of iron ore. I think that's silly. And if anything, I think we're going to start struggling with the quality of these raw materials.
I think a lot of people forget that there is a world of places that doesn't have tier 1 infrastructure. We just assume because we look out our window and say, classic infrastructure.
But you're right. Everyone looks at the data from the USGS, the US Geological Survey, and there's always infinite minerals everywhere. The problem is it's in the ground, it's not economic, and there's no infrastructure. Right. Apart from that, there's no problems. And it gives this really bizarre sense that, we've got infinite wealth, and we really don't.
No, that's right. A retail investor question point of view. CLE is now 15 million market cap. Champion Iron is 3 billion. if CL is touted as being some like a champion iron or better, why are we still at 50 million?
Well, I think, I mean, that's just the market, right? And the market's mysterious. But I think you should look at just look at Champion Iron's development history or FMG. It's not linear. There's always pullbacks. And I would argue that we're still in relatively early stages, and that from where we are right now, that's not an unreasonable valuation. I think we need to demonstrate to the market with our news flow, and we do have a news flow coming along that you can look forward to, that we're delivering. I still think there's a lot of skepticism that the deal's even real with Vale, bizarrely enough.
That's where I get a lot of sense about
Yeah.
the whole concept, because not many projects get this kind of backing. I mean, not iron ore, not gold, even copper, where you have a structured big brother who's willing to fund the process, right?
Right.
And I feel that's why a lot of my questions centered on that concept. But when you think back,
Yeah.
why would someone like a Vale spend all that time and effort if they were not even half interested or taking a punt? But nobody takes a punt with that kind of effort.
Yeah. Look, I would agree. We to some degree, I could say to you bluntly, we don't care about the share price because we're funded, right?
Yeah,
And at some
yeah.
point, Vale buys out the minority stake or carries us to production. There's infinite wealth there, happy days. That's,
Yeah.
a shallow narrative, but one I could serve. I think there's a bit of disbelief. Cyclone has a lot of history, right? If you look at the shell itself, and I'm calling it a shell deliberately because now Iron Bear is a dominant project in it. There's a lot of shareholders within Cyclone who were there for gold projects, for other types of projects, and might not be comfortable now that we're becoming an iron ore play. So I think that's part of it, and I think that's very legitimate. And so now that there's some liquidity and the share price is going up, you have a natural churn of people who might have been gold bugs who now become, iron ore bugs, if that makes sense, and other commodities, copper, you name it. So I think that's a big part of it. And I think the other thing is, our investor relations team, we still get lots of people who think for some reason that there's some sort of out, that the deal is not real, or there are parts of the deal which might be, hidden in some way. And I think that obviously, we act with integrity. I don't even know what to say. Of course, the deal is real. It's been notarized. I don't know that we can disclose a full deal, but it's a pretty straightforward deal, and I think it's a very fair deal. So maybe you just need a bit of time for things to sink in. But again, if you look at other companies which have been through this, this is not an unusual. I mean, we had a market cap of 10, if you go back 6 months. So, there's also people just taking profit.
Well, I think that's just nature of the market, but I think there is a element of truth about how people may believe the future of the iron ore market, and we had that discussion just then. I think that's really critical because people read and hear,
Yeah.
and it's very emotional that iron ore. Simandou is opening up, and the narrative says, "Oh, that's going to take a lot of iron ore away from
2 years, a year and a half.
Yeah, and then but I released a blog a week ago regarding magnetite and the rise of WM magnetite, and the guys that like, I didn't realize Andrew Forrest was already in the market of iron magnetite, and so that was released last year, and I think it was
that's
last year.
Iron Bridge. Yep.
Yeah, and I missed that kind of narrative, right? But I think when you start looking at it, it really makes sense that there is that shift.
Well, I mean, I think you're touching on a really interesting point here. I mean, everyone's excited by rare earths, right? And prior to that, lithium, and prior to that, graphite. So, and iron ore is just not a sexy commodity.
Yeah.
But I think if you want to make money in this business, you have to be a bit counter-cyclical. You have to look at the fundamentals. I'm I'm a believer in iron ore because I think any industrial base is still, we're still a steel economy, we're still a steel culture. Uh, and that steel isn't going to go away. And so if you believe in, the world economy, you believe in steel. So it's not a sexy commodity. We're not flavor of the month. There's a lot of people who like to, who believe that it's all in, magnets and battery minerals, but those are tiny, tiny, tiny markets.
I think so. I think this whole concept of going green and everything else and this sexy lithium and things, but I've always said the base metals, the coppers, the one that builds economies are the mainstay. And if you get them into a product of like those, I mean,
Yeah.
there's a reason why iron ore does so well for decades, right? There's families who lived off that.
Well, consider that iron ore is the second largest traded commodity in the world after oil and gas.
Yeah, well, oil and gas is that's another story.
Right.
We'll never see the
Yeah.
back of that for a while, but I think that narrative of iron ore where it should be in terms of future is very important. I think we touched on that quite well.
Right.
What do you want us to take away from this discussion? I mean, we're trying to conclude the discussion, but what do you want us to take away?
Well, a sense that we're acting with integrity, that, we're not trying to spook the project or mislead the market, that, we've worked with Vale and they trust us. And if you trust Vale, you can trust us.
Yeah, look, no matter what people say, at the end of the day, this is a classic business where you got someone that is backing you all the way, who actually obviously must believe the story, otherwise they
Right.
wouldn't be there, right? So
Look, I think that's true, and I think that's a good takeaway.
yeah, look, Paul, thanks for your time. It's a fantastic story. I'm glad that we've had this discussion. I think it's a really complex story, but simple story, if that makes sense at all.
Right.
But well, I'll definitely be following the journey, obviously, as a shareholder, and let's see what happens in 6 to 12 months' time.
Thank you.
Thank you.